This one number could decide if you lose your job, and right now it is starting to move. If it rises just a little higher, millions of people could lose everything, not because they made a mistake, not because they failed, but because the economy itself is changing. Every single month, one number quietly shapes the direction of the entire economy. It does not trend on social media. It does not go viral every day. But when it moves, everything changes. That number is unemployment. Most people ignore it until it is too late, because unemployment does not arrive like a disaster in a movie. It starts quietly. One company freezes hiring, another cuts workers. A factory reduces shifts. A small business closes its doors. At first, it feels isolated, temporary, manageable. But then the pressure spreads. When people lose their jobs, they lose income. When income disappears, spending slows down. Restaurants become empty. Stores lose customers. Businesses stop expanding. Companies panic. Investors panic. Markets react. And suddenly an economic slowdown becomes a national crisis. We have seen this happen before. In 2008, millions of Americans lost their jobs in a matter of months. Entire neighborhoods changed forever. Families lost homes they spent decades paying for. Retirement savings disappeared. Small businesses collapsed. What started as a financial problem inside banks spread across the entire economy faster than anyone expected. At the peak of the crisis, unemployment in the United States surged dramatically, but the damage was not only economic, it became emotional, psychological, personal. And today, many economists fear something similar could happen again, because the warning signs are already appearing. Interest rates have risen aggressively over the last few years, making borrowing far more expensive for businesses and consumers. Companies that once expanded rapidly are now cutting costs to survive. Layoffs are increasing across technology, finance, media, logistics, and manufacturing. At the same time, another force is accelerating quietly in the background: artificial intelligence. For years, automation replaced repetitive factory labor, but now AI is beginning to replace white-collar jobs too. Customer support writers, analysts, designers, assistants, even software engineers are starting to feel pressure from systems that can work faster, cheaper, and without rest. Large corporations are investing billions into AI infrastructure because, from a business perspective, replacing workers with software increases profit margins dramatically, and that changes everything. Because unlike previous technological shifts, this transition is happening globally and extremely fast. A company in New York can reduce hundreds of employees after integrating AI tools. A logistics company can automate operations. A media company can generate content with fewer workers. A bank can reduce customer service teams using AI agents. Every efficiency gain for a corporation can become a lost paycheck for someone else. And this creates fear, not just fear of losing income, but fear of becoming replaceable. Part 2. History shows that unemployment does not rise slowly forever. It stays relatively stable for long periods of time and then suddenly spikes upward. By the time the average person realizes the situation is serious, companies have already started layoffs and the economy is already slowing down. That is what makes unemployment dangerous. It moves quietly until it moves violently. Now imagine unemployment reaches 10% again. This would not simply mean people struggling to find work. It would affect almost every part of daily life. Millions of families would struggle to pay rent and mortgages. Credit card debt would surge. Car payments would be missed. Small businesses would lose customers. Housing markets could weaken. Consumer confidence would collapse. And confidence matters more than most people realize. Because modern economies run on belief. People spend money because they believe tomorrow will be stable. Businesses hire because they believe growth will continue. Investors buy because they believe the future looks strong. But once fear enters the system, everything changes. People stop spending, businesses stop hiring, banks become cautious, markets become unstable, and then the cycle feeds itself. One layoff creates another, one bankruptcy creates another. One failed company affects suppliers, workers, customers, and entire communities. This is why economic crises spread so quickly. The United States economy also affects the entire world. When unemployment rises in America, global demand slows down. Countries that rely on exports begin to struggle. Factories reduce production. Shipping activity weakens. Investments decline. Supply chains become unstable. A slowdown in one country quickly becomes pressure for many others. Even people who believe they are far away from the problem are still connected to it. Because the global economy is no longer isolated. Everything is connected. One market crash affects pensions. One banking crisis affects businesses. One unemployment spike affects entire industries. And social media makes fear spread even faster than before. The psychological effect of unemployment is also devastating. Studies during previous recessions showed rising anxiety, depression, stress, and financial trauma among unemployed workers and their families. Young graduates entering weak job markets often suffer long-term career setbacks. Older workers who lose stable jobs sometimes never fully recover financially. Entire communities can slowly decline. Local businesses close. Downtown areas become empty. Crime can increase. Families move away. Opportunities disappear. And the longer unemployment remains high, the harder recovery becomes. This is why governments and central banks monitor employment data so closely, because unemployment is not just another statistic. It is a reflection of human stability. It reflects confidence, spending, growth, hope. And right now, the world is entering a period of uncertainty. Some experts believe AI will create new industries and eventually replace the jobs it destroys. Others warn that the transition may happen too quickly, leaving millions of workers behind before new opportunities appear. No one knows exactly how this ends, but one thing is certain. The economy is changing faster than most people understand. The people who survive economic downturns are usually not the people who panic first. They are the people who prepare early. They adapt. They learn new skills. They understand where the world is moving before everyone else notices, because waiting until the crisis becomes obvious is already too late. The most dangerous moment in any economy is the period when people still believe everything is normal, right before reality changes. And that is why understanding unemployment matters, not because of charts, not because of headlines, but because it affects real people, real families, and real futures. So the real question is not whether unemployment will rise again. History suggests it will. The real question is how high it will go, how quickly it will spread, and whether ordinary people are truly prepared for what comes next.